Welcome to the Forex, and here we're looking at the US dollar. And yesterday we were looking at the high of wave 5 and A being closely sort of in place there, and looking essentially for a corrective pattern across and below the 80. And the range would be group 1, which is above the 80, which is 10, 20 and 30, and then also group 2 below, group 2 here below, so 65, 72 and 80 here as the support here. The correction itself, we're looking for some type of three-wave corrective pattern that can pull back to 79.50, just depending on what announcements are made, and there's be a few tonight for the global markets, being Thursday. So check on those. So look, basically, while this is looking for a top in play here, and look, there may even be another little move up here, because I can count 1, 2. All of that could be the third and the fourth and the fifth. So there could be one little move there, but the main point is that we're looking for a corrective pattern across here. So that pretty much leaves the euro at its low as well. So just looking at the 4-minute chart here, where we sort of were yesterday, there's a couple of points I wanted to make here. Is that we're expecting a rally from this low here, the 136.90 area, 136.88, whatever it is, and looking to go back towards the 138. Now it may not go back to the 138. There's the 137.72 area, and the supply comes in, the second level of supply comes in at 137.50 to 137.72 area there. So that's where that resistance is going to be. Now what we want to see from this point is that this where do we start here? Right, this particular move up through to this high here, or forget the spike, but in here is basically in 3 waves here. So it can be counted as 5, I guess, but look, the other main point is that probably more importantly is that this move down here, you can see that it's got overlapping wave structures, so it's a corrective pattern. Yeah, so that means that it's bullish corrective. So we should see a move up, and that's what we've been sort of expecting, a move off the 137 area there, which is just obviously here. So that's something to look for. Obviously the supply here at 137.20, another 72 number, you need to be on sort of top of that if you're going to be trading the rally. Now the other interesting point here is that the daily chart is deeply oversold. Yes, it can linger down at this 137 area for a little bit longer, but give it another half a session or so, and it should be applying pressure to put this to the upside here. So and this is the sort of same really for some of the other markets as well. The euro crosses with other market, and the pound cross with other markets as well, having a bit of a rally off these lows here. So look, the main point is that it's deeply oversold on the daily at these points here. It's ready to pop to the upside. Look, the only thing, if you're trading the corrective pattern to the upside, you just need to be aware that if 137 becomes a retested resistance, then you need to trade in line with the trend. So that's something. So in a bit of a nutshell, when it comes around, support on 137 or break 137.20 to the upside would create the long trade, and 137 as resistance to the downside, and as I mentioned, to the upside we're looking at 137.50 where the supply starts, and also through to 137.72 group 2, micro group 2 area. The Australian dollar it's touched on 94. Now one of the important things here, I guess, is that the move from this low here, the 92 area through here, it's pretty much got, in one way or another, it's pretty much got 5 waves up to the 94 here. So we know that after 5 waves, we get a corrective pattern. Okay, so I can typically see that this is the 3rd wave in here. I can see that this is a 4th wave because it's complicated, and this is a 4th wave because it's complicated. This 5th wave here may not be finished. It may be the situation where we've got up for 1 here, back for 2 here, up for 3 here, back for 4 here, which is overlapped wave 1, which is a bit of a no-no, but in derivatives and leverage products it tends to do that. That's its weakest rule, that it breaks all the time. Not all the time, but a lot anyway. Out of the 3 rules of Elliott, that's the one that it breaks the most when dealing with leverage products, when working with leverage products. So look, I don't know if we got 5th wave here or we got 5th wave here. Even if it is here, then we'll still get the A, the B, and the C correction over here. But it has to correct this move here. So we'd be looking for, a reasonable corrective pattern in this area here as such. So something like that to balance that trend out through here. The other point is that wave 4 here would be in here, and that would make this an A, a B, a C, a D, and an E, basically a triangle pattern, which would pretty much suit this one here. This one's just larger than this one here, so to speak. But both of these are wave 4s because we've got in here the 1, 2, 3, 4, 5 into here for the 3rd wave in here, leaving wave 5 and wave 1 of about the same degree. So look, a corrective pattern in here. The other thing too is on the daily, it's moving into on the daily chart, it's moving into the overbought zone, but I think that could possibly trip out because the momentum's in the right place. It could just pick it up and take it higher. But one way or another, to here now, either bring the stops to here or take the money here and wait for the correction to unfold here. And we'll look at support on top of 94 in due course. Right, the Euro Australian. For the Euro Aussie, we were looking at 146 as being the target for the short trade, and looking for a bounce off the 146 back to the 147 roughly as an A and a B and a C correction for wave 4. So that's what we'll look for there. This market is also deeply oversold at this point here as well on the daily, so we've got that sort of support there for a pop back through here. But we think there is one more sort of move down through here based off this 1 and 2 to here, and all of this being the 3rd wave through here, and the 4th and the 5th. But let's see how this develops here. We'll be able to see if we've got this right or not. Let's just have a quick look in here. I was just looking because I thought we might be looking to seeing if we've got a nice impulse wave structure here, but it's still a bit early to say. It's still in 3 waves here, but look, anyway, looking back up through here, the pound yen. So just on the daily chart here, just to have a look at the bigger picture because of the sharp move down. Looking, this has always been a bit of a messy chart here as such in terms of sort of tracking this particular wave 4 here from wave 3 high over here, moving up through here. So it's, it is very, this is all really quite sort of complicated, and the best labeling we can find for it is a triangle pattern, and that's pretty much been the case of looking at this structure through here as an A and a B and a C for the B wave, and then 5 waves down for the C wave. So this trend line here is just sort of shape it up a little bit, but obviously that there's this here as well. So anyway, let's just see how this goes. And in terms of counting this down here, we're looking, C waves are normally in 5 waves, but in triangles they're in 3 waves. So we need to look at a zigzag or a double zigzag coming from wave B down to wave C here. Of course, there's great support at 170 as well, so we're not going to ignore that. Once the market, or if the market finds the 170 as a retested resistance, well, then we'll be on track for looking for wave C through here. But any trading should be just done down to the 170 area. The idea yesterday was to be short at 171.72 in here. And you can look to cover now if you would like, but there still appears to be another little move down through here in terms of the double zigzag, in terms of an A and a B and a C here for the A wave, the B wave back to here, and the C wave down here, this C wave in 5 waves here, a bit like this C wave here. So an A and a B and a C, and 1, 2, 3, 4, 5, so to speak. That's what we're looking for here. But we can't expect too much out of the last leg here because the extension's in the 3rd wave. So the wave 5 here will be roughly the same size as wave 1 here. Don't look for that exactly, because you've always got to take the wave count and work with the price as well, because price attracts more. Some numbers attract more orders than others, being even and whole numbers and odd numbers and so forth. So, but either way, like the euro US dollar and the pound, those we're expecting a rally, and that's what we're sort of looking at now, basically. So in looking at these little 5 waves down through to here, I haven't pulled this apart through here, but I can see that the market's slowing down into here. So we can, call this in at the 3rd wave here and look for a 4th wave. The 4th wave should pull back 38% of this move down through here. So you can look at that. So 170, 130 would probably be the wave 4 of 1 lesser degree, so that would be a target area in through there. So not really worth sort of trading this up through here, but knock yourself out. The first little move up through here now is in 5 waves, so it's developing an impulse wave here. So we've got wave 1, A, B, C for 2 here, nice 3rd wave, 4th wave, and a 5th wave developing here. So after 5 waves, we'd get an A and a B and a C, and then we'll get another 5. If we get 5 in a change of direction from the low here, from the market's moving down here, if we get 5 in the opposite direction, then we'll get a correction, and then we'll get another 5 through here. As mentioned, the target is the 4th wave of 1 lesser degree, so it could be this one here, the 170, 120, or even a little bit higher through here, but this would be the zone here. But otherwise, look for that 38.2% retracement level. And the euro yen is same but different. Once again, it's oversold, reasonably oversold on the daily chart. So once again, we can expect some support to come in. From that, a bounce up from the 139 sort of 50 area here. Now, I was looking at, from this move here, coming down here, I was looking at another little move down through here, but it's possible that this wave C low can be in here, right? It could be. I just want to see how this develops through here, but otherwise we'll be heading down a little bit lower. And that simple reason for that is I'm counting 5 waves from here down to here. Now, it could be counted in terms of down for 1 here, an A and a B wave here, and a C wave here for wave 2, all the way down for 3, back for 4, and down for 5 here. So it can be completed here. Otherwise, if I'm wrong, then it would be something like down for 1 here, back for 2 here, then 1 A, B, C for 2 back here, all of 3rd, 4th, and 5th, a little bit like this here that I've got drawn out. This is the first picture that I had of it, making wave 2 very complicated. And in the guidelines of alternation, normally we would see wave 4 being the complicated structure, okay? But, if wave is simple, then wave 4 will be complex. If wave 2 is complex, then wave 4 will be simple. That's the guideline of alternation in nature, and it occurs here as well. And it's the same in corrective patterns as well. If wave A is simple, then wave B will be complex. So it's always the same, isn't it? It's like trend correction. So it's always the opposite sort of dynamic working. Once you get your head around that, it makes life much easier when working with the structure, because when you're new to markets, you tend to look at the markets, and what you're looking at is what you think you're going to get, but you always get the opposite. So anyway, so that's that, and just drilling in here a little bit further, we can see the bounce. We could see this slowing down through here. Do you know what I mean? So and then you've got the daily that the momentum is still to the downside, but the fact that it's oversold quite reasonably deeply, the time that corrects itself and moves up, then the momentum can shift a little bit. But it takes you can take two higher closes on a daily to sort of shove that around a little bit. All right, well, that's it really. So in a bit of a nutshell, there's some markets that are running, some are not, and the euro against the dollar and the yen will be sort of moving to the upside. So, but that upside move is being viewed as a corrective rally, but certainly tradable because they're deeply oversold. So just don't overtrade. That's all. All right, thanks.